For the life of me, I could not understand what the heck cryptocurrencies are. And they're just so weird and it just doesn't make sense to me. I thought it was ridiculous. But that was unfair of me. I never took the time to really understand what cryptocurrencies were until now. Hello, my name's Anthony Mendez, and in this video, I'm going to explain what cryptocurrencies are and a lot of details about them. In this video, you're going to understand the main aspects of cryptocurrencies. Three of the main ones that I'm going to be explaining are the acquisition of cryptocurrencies. Secondly, the exchange of cryptocurrencies. How do you get rid of them? How do you change them? What can you change them for? And finally, the value of cryptocurrencies. Why are they worth what they're worth? How is that value determined? And so on. And in each one of these, there's a plethora of aspects and details that you're going to better understand in this video. And like Warren Buffett says, you should never invest in anything you don't understand. So hopefully in this video, I can help everybody understand exactly what cryptocurrencies are, how they work, what they are, where did they come from, and all of that details so you can better make decisions when investing. Okay, let's begin. But first you need to like the video. All right, thanks. Now that that's over with, let's get on with the video. Okay, so let's begin. To understand the acquisition of these cryptocurrencies, I'm going to relate it to an arcade. An arcade like Chuck E. Cheese or Peter Piper's. I don't know. Those are the only arcades I know of. So we're going to call it a crypto arcade. At this crypto arcade, there are three main factors. There are coins, there's the game itself, and there are tokens. These three main things are what dictate the game, and the reward is what you want. These tokens are what you're looking for. However, in order to get the tokens, you must play the game, and in order to play the game, you must have the coins. So in this scenario, the coins are your passageway into the game of trying to acquire cryptocurrencies, but I'll explain and relate it all together in a little bit. So once you've acquired coins, you can begin to play the game. However, this is an online game. Everybody on Earth can access this game, and you're competing against everybody else who wants to play, so long as they can get the coins to play. And this game has a couple of rules. The more players that are currently playing, the harder it becomes to win. So the more players there are, the harder it becomes to catch the pig, as in the payout. If there are more players, there is a less likelihood that you will win because there are a limited number of tokens, of rewards. Not only that, but the game becomes harder to win. And on top of that, over time, the payout becomes less and less. However, things will change over time. The reward will be continuously reduced. However, the difficulty will fluctuate. If it becomes more popular and more people are playing, it becomes harder to win. However, if it becomes less popular and less people are playing, it becomes easier to win. Okay, now we understand the game. What happens when we begin to win the game? Well, we get rewarded. We start to get tokens. These tokens are worth something, but I'll explain the value later on in this video. But essentially, this is how you get rewarded, by winning the game. However, there's another detail that I left out. This game has a limited amount of tokens. Let's say 20,000 tokens. After 20,000 people have won a single token, the game has run out completely. There are no more tokens for it to pay out. And essentially, the game is over. Out of service, there's nothing more to win. Okay, so now let's relate this back to cryptocurrency. The coins are GPUs, graphical processing units. These graphical processing units are what allow you to play the game. But what's the game? The game are complex blocks of code that need to be solved. Essentially, these GPUs are playing a game in which you need to figure out a very complex passcode in order to win. However, at the same time, there are many other people trying to do the same. But finally, there are the tokens, the payout, the cryptocurrency itself, like Bitcoins, Litcoins, Dogecoins, or whatever the currency might be. And these are paid out as people begin to win. And the rules apply just as well as with our theoretical arcade, our crypto arcade. The more people that are trying to figure out these codes, that are trying to get any coin at the same time, the harder the game becomes. The harder it becomes to solve a problem. Not only that, but over time, these rewards get reduced in size. And on top of that, there is a limit for some of these coins. For example, Bitcoin has a limit of 21 million Bitcoin. After 21 million Bitcoin have been found, there are no more to find. The game is essentially over. However, in theory, you can go in and modify the rules of the game, but for now, this is the case. Okay, well, hopefully that made sense and you now understand how Bitcoin are acquired. But now let's talk about what you can do with these rewards, with these coins. Many businesses begin to accept these coins. You can exchange them for products, essentially like that little stand at your Chuck E. Cheese where you can exchange your tokens for a toy or something. However, it's become so popular that other people are buying these coins for currencies of other types, like the US dollar. So essentially, people are beginning to buy and sell these tokens as if they were any other commodity. However, you can't eat them, you can't touch them, you can't do anything with them. However, they are there, you do have them, but they're in this weird realm of they are yours, but you don't have anything, but they are yours. And they are worth something. But these coins have become so popular that it's become so easy to exchange them for money, for US currency. You can go on an application like Robinhood and essentially trade them like stocks. You can buy and sell just as you would buy and sell a stock. The exchange of these coins today has become very simple for many. There are a lot of cryptocurrencies that aren't on these applications and aren't as easy to trade. However, many of them have become very easy to trade and are very basic. But essentially, that's the gist of it. Now, we're moving into our last section, the value of cryptocurrencies. And this is my favorite. This is what I believe is the most important aspect, because this is where investors will be. Here is where you want to understand, why is this worth what it's worth? Is it a good option to invest in it? Does it make sense? Well, for that, you first need to understand it. Understand why a currency is worth what it's worth. The US dollar is supposed to be backed up by gold. However, it's become so universal and everybody has agreed on its value that it's just people trust it. However, cryptocurrencies have not really been agreed on as what their price is, so it gets complicated. But let me explain. The value of these cryptocurrencies are determined by supply and demand. If you understand supply and demand, then you pretty much understand why cryptocurrencies are worth so much. But supply and demand is essentially a law of economics. It's how things work, how pricing works. But essentially, if supply goes up, demand goes down. If demand goes up, supply comes down. And this is for obvious reasons. So let's imagine a scenario. Let's say there are 10 people trying to buy a cake. However, there are only 7 cakes in existence. I know it's a bit of a flawed idea, but let's stick with it. There's only 7 cakes in existence. These 10 people want the cake. However, there's not that many. So in this, the demand will increase because there are more people that want to buy and less people that want to sell. If there are 10 people that want to buy, then the demand is 10. However, there are only 7 cakes. This means that the supply is low. People are trying to buy it at whatever cost they can. Because there are less cakes, they want to win them over from the other people. So they pay a little bit more for it. However, now let's imagine we have the same 10 people that want to buy cakes. However, there are 14 cakes for sale. Well, now you have some options. Here are the 10 people that want to buy cakes. However, there are 14 cakes. This means that the price has to come down in order to sell all 14 cakes, or else there's going to be 4 cakes left over. And for this reason, the price has to come down. People can begin to shop around and say, you know what, you're too expensive. I'm going to go with the person next door. And this person's going to be like, okay, that's fine. But then he's not going to be able to sell his cake. He's going to have to say, all right, you know what, I'm going to give it to you for a better price so I can sell it. However, somebody out there is going to be left over with a cake. Essentially, this is the law of supply and demand. Supply and demand has many other aspects to consider, but essentially that's all you need to know for now. I'll be making another video explaining more details about supply and demand, so make sure to watch out for that video and subscribe. Okay, so it's pretty basic, right? If more people want to buy Bitcoin, then the value goes up. If less people want to buy Bitcoin, the value goes down. If the demand increases in almost any market, the supply goes up because people start producing more. However, with these cryptocurrencies, you can't produce as much as with other commodities or services. So it's fixed. So while this demand can move quite a bit, this supply is pretty much stuck where it is. For this reason, prices can inflate dramatically, but they can also decrease dramatically. There can suddenly be a loss of popularity and there'd be too much Bitcoin and the price would completely tank. For this reason, it's extremely uncertain and it's volatile because it can move so freely on the demand curve. And because this supply curve cannot catch up with it, it gives it a lot of opportunity, a lot of potential, but also a lot of risk. This is why cryptocurrencies are so uncertain, because they're determined by nothing else than this supply and demand curve. How popular is it? How many people are looking to buy it? For this reason, personally, I would not buy cryptocurrencies at the time. I don't find them to be an investment I'm willing to put my money in. Now, I can't say that it's a terrible opportunity because I don't fully understand the minute details of investing in cryptocurrencies. But essentially, I believe it's too volatile, it's too uncertain to invest in. I can completely lose all of my money, or I can make a ton of money. Who knows, maybe someday I will get into it, but for now, it's just not something I'm willing to try. Anyway, thanks for watching. If you enjoyed the video, make sure to subscribe, give the video a like. There'll be a bunch more content coming up on business, finance, and a lot of things like this, so I'll see you guys next time.